Alrighty, good morning, good morning, good morning, good morning. I hope you guys are having a fantastic day. It's been a while since I've done one of these solo videos, but I figured, hey, we're about to close a massive monthly, and it's about time that I give you guys an update on what my mindset is, what my thoughts are on the current price action. Now, there's not all that much that has changed since we've been formulating our trade like months ago, right? We're just seeing everything play out now. It's going our way. Hey, we are lucky in that regard. But, there are things that have changed in the macro markets, right? In the fundamentals, there's been a lot of fear, uncertainty, and doubt in the macro market, and now there's fear, uncertainty, and doubt in specific to crypto. Now, when people say, "Hey, it's not really FUD, man. It's things that are real. You got to worry about it," guys. Fear, uncertainty, and doubt doesn't mean that something isn't real. FUD is FUD. FUD could very well be legitimate FUD, right? So when people say, "Hey, this is just FUD," well, it's reflected on the charts, right? Fear, uncertainty, doubt, right? When you're uncertain about something, that's going to reflect on the markets. That's what markets are, by the way, guys. Markets are a representation of uncertainty, right? The more uncertain markets are, the more risk is going to be priced in. The more certain the markets are, the less risk is going to be priced in. And you're going to see markets go up in that regard. But things are always priced in. And if there's one thing that the markets have proven over the past couple of months, is that technical analysis is king. You guys know how much I love the fundamentals. I love it. I follow it. I love studying it. But I use technical analysis to make my profits, to position myself even on my fundamental trades. You know why, guys? Because it allows me to, one, risk manage. Let's go ahead and write that down. Risk manage. And two, allows me to know what the market positioning is. Regardless of how bad the fundamentals may look, guys, the market positioning is the ruler of all, because they know way more than you do, and the market is always right. And the market was telling us months ago to position on Bitcoin at around the $17,000 mark because the edge is towards the upside. And hey, what do you know? $26,000 now, sitting a tad bit above our first target, right? Our T1. Let's go ahead and discuss our agenda. Today we'll be discussing, we're going to be doing a quick Q&A. I got a couple of questions on volatility and on my weekly trade. So we're going to be talking about that. We're also going to be talking about the big monthly close. We are sitting at bullish resistance. What do I mean by that, right? We're going to be discussing that. And hey, if you have some time, I'll be talking about some macro concepts as well. But let's go ahead and get started with Bitcoin's volatility and trend analysis. Here we're looking at a screenshot of the new dashboard, right? We have a new update where we can look at a drop down of all the time frames together of a particular asset. So I'm loving this update. If you guys have been following Mango for the past few months, you guys know I've been like manually putting in the screenshots for all the time frames, but now it's just one single neat screenshot. So over here we're looking at Bitcoin, and you guys can see that the trend on the 4-hour has flipped short over the past 13 hours. The momentum from the Binance FUD is definitely going to be helping out the bears over here. At the moment, we are sitting at 12-hour support, right? So what's going on at the moment, guys, is that the 4-hour low time frame short trend is testing the 12-hour trend, right? We're sitting at 12-hour support. Now the question is can the 4-hour flip the 12-hour trend into a short trend as well, or will the 12-hour bull step in and push price to the upside? We still have the daily long, the 2-day long, the 4-day long, and the weekly long. So at the moment, guys, the bears are hunting for this space, in my opinion, right? The space between the 4-hour trend flipping short and all of this 2-day, 4-day, and weekly support, which is sitting really far away. So if we do lose the 12-hour trend, I'm not going to be placing too much of a emphasis on the daily support, guys. I'll be looking towards these levels being tested. Remember, we do have monthly resistance overhead, right? In yesterday's video with Krisha, I discussed how I am bullishly cautious, right? I'm cautious against the monthly support, right? Monthly resistance. Remember, it's bullish resistance, right? We'll be discussing what I mean by this very, very soon, but I'm still cautious against it. I'm not looking to add to my position over there, but I'm not looking to take profits either. I'm just enjoying the trend at the moment. But I I am respecting it as a resistance. So bullish resistance, yes, but I have to respect it nonetheless because my rules are forcing me to. And hey, I just follow my rules, man. I'm a freaking monotone robot in that regard. Rules say X, I just follow X, right? So that way, if things go wrong, I just get to play my rules. How awesome is my life? So going back to what we were talking about, the bears are hunting for this space to get filled between the 4-hour and the 12-hour short trend. Well, the 12 hours hasn't flipped short just yet, but if it does, I'll be looking for that move towards the downside. Until then, there's still a bit of hope for the bulls to pick up over here and retest that 4-hour trend. The bulls essentially want to retest that 4-hour trend that has just flipped, and they likely want to flip it back into a long trend, and hopefully flipping the monthly around as well. At the moment, the monthly does have resistance overhead. Okay, so I'll be showing you guys the charts very, very soon. At the moment, the volatility is still looking good on the 12-hour time frame. Low volatility. The bulls will be likely, if you're looking only at the 12-hour trend, guys, you'll be looking to pick up definitely worth the trade, because it's easy to manage your risk over here, and the edge towards the upside is a tad bit better. I'm personally not interested in longing this, but if you're looking to play the 12-hour time frame, definitely a good trade. If you do lose this though, you have that space that is potentially getting filled towards the downside, and the wall on the 12 hours likely going to pick up as well while flipping towards the short side. Okay, so with that out of the way, let's go ahead and address this question right over here. So this is a really, really, really good question. I really urge you guys to ask more questions like this. Essentially, Breakbeat Stu asks, forgive me as I don't know exactly how the dashboard works, but wouldn't the low volatility score mean that either the bulls or the bears could step in and significantly move the market again? A low volatility score is not bullish in itself, no? Exactly. That's a really good statement, man. I want you guys to ask these kind of questions because these are things that I've already addressed a couple of months ago, even a few weeks ago. But there are a lot of you who are new to the community that have not watched those videos, right? And I tend to forget that. I need to revisit those concepts with you guys. So if there's a concept that you guys don't understand, please ask questions, guys. Okay, I will revisit them. I need help from you guys to remind me that I need to revisit these ideas. Sometimes you guys may have already heard me talk about these things, but getting a refresher from me is a good thing, right? Regurgitation helps us really get a solid foundation of these ideas. So yes, low volatility or high volatility on its own is not bearish or bullish, guys. When you combine it with the trend though, that's when you can derive insights and edge from what is going on, right? So let's go ahead and break this down. For example, let's say that you have a prolonged period of consolidation, really low volatility, and you get a sudden move towards the upside, right? Now the trend is clearly towards the upside, but then again you get compressed volatility, right? Volatility compress leads to volatility expansion, but the big question is which direction? Which direction do you choose? If volatility compression leads to expansion, which direction will that expansion happen, right? What we do is we err to the side of the trend, right? So if the trend is towards the upside, we edge towards the upside, right? We use that as edge to say, hey, the volatility is likely going to expand towards the upside very, very soon. So low volatility allows you, for one, easier positioning, right? Because you get to have bigger position sizes with lower volatility. And two, it is indicative of a trend expansion towards the direction of the trend. So if the trend is towards the downside, you should err towards the side of the trend, or rather volatility breaking towards the downside, right? So at the moment, we were seeing that, hey, or rather trend is long on all time frames. So we are going to be looking for volatility to expand towards that direction, right? Now remember, over here I showed you guys a consolidation where the price is simply moving in a symmetrical triangle, but you could have the lower time frames move like this, right? Which is how you get your bull flag. So you have higher time frame impulsive move on your weekly. On your lower time frame, you get your downtrend on the 4-hour, for example. You could have a downtrend where the weekly is still in an uptrend, and then you get the next big move towards the upside. Now again, this is all a probability play, not a certainty. And I highlighted that in my answer to you over here. I'm just going to go ahead and read it out to you guys. I say that, yes, low volatility in itself is not a sign of bullishness slash bearishness. It's a sign of consolidation compressing that will lead to expansion eventually. It's a sign of consolidation compressing that will lead to expansion eventually. I'm going to repeat that for you guys. That expansion has a higher probability of expanding towards the direction of the trend. Remember, though, the key term is probability, not certainty, right? And the combination of trend plus volatility to find edge in the market combined with support and resistance is when it gets even that much more powerful, right? So again, I'm going to go ahead and draw it to you. You have your impulsive move, okay? You have your lower time frame volatility and inching towards the downside now, putting in a bull flag. Now you combine that with our concept that we've taught, falling channel on over to higher time frame support. Now you can look for a move like this, right? Impulsive move, falling channel, down on over to the 12-hour daily support, whatever you're looking at, and boom, you're looking for that to break towards the upside. That was our big trade here on the weekly, guys. Right? That was a big trade over here. Falling channel, consolidation. One of my favorite and more complex plays is where you have a falling channel, right? Everyone is expecting it to break towards the upside. It breaks down. People exit their trades, but we just consolidate underneath the falling channel, and then we break back into the falling channel. And this was our trade from all the way back in December. Right? We start looking at it in November, right? Looking for it to formulate and get that confirmation. We start seeing the signs of it being put together, and then we got the perfect setup, an ascending triangle underneath the falling channel, the cascading pattern play, right? Where the pattern, the lower time frame ascending triangle actually pointed to a break of the higher time frame falling channel, which cascaded into our equilibrium trade, which pointed to our first target of 24K, which we've met, of course, and we still have our target of around 42K in place, right? So we can go ahead and discuss that now. Wow, this is a long video today. I do apologize, guys, but there's so much to talk about, and the markets are so freaking exciting recently. So let's go ahead and give you guys an update on what a cascading pattern trade is looking like. And right over here, we have the weekly, we have a Tenkin, Kijun, Ichimoku, and the 200 moving average right underneath. Okay. So again, target one, let's go ahead and write it down, was around 24.6K, and target two was, I'm going to go ahead and draw it over here. Actually, target two was $42,000. It still is $42,000. We have a zone here. I'll discuss why probably in the next video. We're going to go through the history of Bitcoin, and now we actually have a target 1.5. Target 1.5, which is around 32K. Okay, target 1.5, 32K. I'll explain why. Yeah, let's go ahead and talk about that. So essentially, guys, if you scroll back up over here, and that's the main reason why I have this old screenshot. Okay, you guys can see that we are playing our equilibrium trade all the way back in November, and we were looking at essentially price making its way all the way to the top of the cloud. Okay, target 2. But the reason we had a zone marked out over here, guys, was one of the reasons. Okay, there were multiple reasons, but one of the reasons was we were seeing confluencing factors on the Kijun right over here, guys. Okay, the Kijun. You may not be able to see it, but the Kijun is right over there, and that was coming in at around $42,000. But we talked about how the Kijun is going to be a dynamic play. We're expecting the Kijun, one of two things to happen. Price shoot up really fast to the Kijun, or the Kijun making its way slowly and surely down to meet price and the Tenkin, right? So that was always going to be a dynamic play. At the time, it was sitting at 42,000, which lined up with other things that we were looking at. So we loved that, right? Our equilibrium play being put in place. And now, though, you can see that it's dynamically moved down to 32,000. The flat line is right over there. It's flattened over there. So I think it's going to stay flat over there for a bit, right? And price is going to be respecting that, right? A lot of other things are lining up over there at 32,000 as well. I'm sure other traders are looking at that level through multiple other criteria. So 32K is going to be our target 1.5. However, 42K is still in place. Okay, I just wanted to quickly go over that with you guys. It's really important. Now, another Q&A bit that I do want to go over. Somebody asked me, I got multiple questions on this. Essentially, Sean, if you think price is going to go up, right? Because I'm bullish over here, right? Like cautiously bullish, but bullish. If you think price is going to go up, why aren't you looking to add to your position, right? You think 42K is a target and 32K is a target. Why aren't you looking to add to your position? And the reason for that, guys, is because my edge has thinned out drastically. Yes, I am bullish, right? But you guys always got to ask yourself, if your trade, let's go ahead and draw something out quickly. Okay, I'm going to switch colors over here. This is really important to understand. Really important to understand, guys. Let's say your support here and your resistance here. Okay, so support and resistance. Okay, if your support is here and your resistance is over here, when the trade starts somewhere around this area here, your edge is all of this gap. Okay, that entire gap is your edge. Okay, simply put, the entire gap is your edge. As price moves and gets closer and closer and closer to your resistance level, right, your edge starts thinning and thinning and thinning, and it gets less lucrative, less appealing to put on a trade. It might be tempting. It might be tempting, but it gets less appealing, guys. Okay, less appealing. So I would say that you have a zone near your support, right, where the trade is really, really lucrative. Okay, then as price gets closer to resistance, you gotta start pulling back and say, hey, I'm not interested at all. In this entire area here, you could be buying pullbacks. Like, let's say you come back and price comes all the way back to the zone, you could be looking to add your position over there. But as we get closer to resistance, you should really be stepping aside and be looking towards other trades for your edge, for your opportunity. And that's why we've been trading the altcoins. Now, I do want to highlight that if you're trading support and resistance, something else you could do is draw a midpoint. Right? You could draw a midpoint and say, hey, if we flip that midpoint, okay, and then we get closer to resistance level and we come back to that midpoint, I'll be looking to buy that. Okay, I'll be looking to buy that, and then I can trade it between the midpoint and the resistance. But you got to make sure that it's worth it, right? That the gap needs to be worth it, and play the appropriate time frame. Play the appropriate time frame, and which is why I love the Ichimoku, guys. Because if you look at this over here, look at what's happened. Look at what's happened. Look how it's dynamically all played out beautifully. Because we were looking at this 200 moving average all the way back over here too, right? You can see, and we talked about it. We were expecting it to come in like that all the way back then. It's beautiful. TA is king, guys. TA is freaking king. Support, the Kijun, resistance, and the 200 moving average. Perfect. Perfect midpoint, right? So that's literally how you can use the Ichimoku, guys, as your all-inclusive support and resistance trend dynamic indicator, right? So this is why I recommend the Ichimoku for everyone who's beginning. It may look daunting, but the Ichimoku for beginner trader is the way to go. Alrighty, let's go ahead and discuss the big monthly close coming up in just 3 days and 19 hours. As you guys can see, you're sitting right up against the monthly 21 EMA. Now, if you guys have been trading Mango, trading easy, trading stress-free, you guys have been keeping up with our good, bad, and ugly trade. And more importantly, the monthly 10 SMA that we've been keeping an eye on now for freaking 3 months, right? Looking for Bitcoin to close over that monthly 10 SMA, which should have been indicative of a next big move on Bitcoin all the way first to the monthly 21 EMA and then eventually towards the Tenkin Kijun juncture, right? Now, guys, this is one of the easiest ways you can keep your trading and your crypto Bitcoin investing extremely simple. This is a tried and proven strategy, right? And you guys can see that we even we use the same idea all the way back over here. Again, I'm going to remind you guys that all I asked for Christmas back over here December was, hey, Santa, please allow Bitcoin to close the monthly over the 10 SMA, because if it didn't, we're looking for that big ugly down move towards the 21 EMA Tenkin Kijun juncture. At the time, it was all junctured up right over there. Junctured up. I don't think that is a word. So you guys can actually use this template right over here as your support and resistance lines, right? The Mango ribbon, right, has all of these in one indicator. The Mango ribbon is a free indicator, by the way, guys. Just join the Discord and PM me or Krisha and we'll give you guys access, right? It has the Tenkin, the Kijun, the 21 EMA, 10 SMA, and other EMA and SMAs that you can activate in a all-inclusive indicator too. The reason we created this was so that those of you who are using the free TradingView version can have multiple indicators all wrapped up in one indicator. So it leaves you room for a couple of other indicators of your choice, right? So this is more of a convenience indicator that you guys can use. So essentially the idea over here is if you lose the 10 SMA, we look for that move towards the 21 EMA, the Tenkin Kijun one at a time, right? At the time, the Tenkin Kijun 21 EMA were all sitting together right over there. And now similarly, if we did lose the 21 EMA on the monthly, right, we'd look for the next move down. And you guys can see that right over there, we lost the monthly 21 EMA. We did have the Kijun underneath us, but at that time, when we lost the monthly 21 EMA, we had also lost the monthly dynamic. So I'd lost a lot of hope for Bitcoin right over there. I remember someone asking me on the Grove chat on our Discord saying, "Hey, Sean, we closed ever so slightly underneath. Does it count?" Yes, it counts. It counts. Support is support. Resistance is resistance. If it's lost, it's lost, right? You got to treat it as a loss until we reclaim it, right? And we lost it, right? Look at what happened right after. We tested the Tengen perfectly, perfect retest, and boom, down. And then boom, down, right? So TA again is king. TA is king. And right over here, remember how bullish the narrative was when we lost a monthly 10 SMA, right? Everything was really, really bullish back then, guys. And that was the first big death knell for Bitcoin. And the final nail in the coffin was us losing that Kijun as well. The monthly 21 EMA and the Kijun closing, rather claimed by the bears, was just disgusting. And then boom. So when we reclaimed the 10 SMA, the first logical move to look for was the test of the monthly 21 EMA. Now, the monthly 21 EMA is resistance, just like it was support over here. And we saw 2 months of bounce, rather 3 months of bouncing between the 21 EMA and the 10 SMA, right? Similarly, over here, it is resistance. Over here, it was support. Over here, it is resistance. So until it is claimed, it is resistance. But there's a caveat here. When pertaining to the monthly 21 EMA, okay? And that caveat is the fact that the monthly 21 EMA, when visited from the underside, right? When visited as resistance, each time, right? In the history of Bitcoin has always led to Bitcoin rallying right through it. It has just blown right past, which is why I call it bullish resistance. Because historically, Bitcoin has not respected it, right? It has respected it on the month off, right? You see a lot of profit taking there. You see lower time frame traders trading against it. You're seeing it right now too. But historically, it has always led to Bitcoin having a big move over it, right? Over here too, you can see that we came up against it, saw it as resistance, but the next month was green. Came up against it, saw it as resistance, but the next month was green. Even the COVID incident, right? Came up against it, saw the market respect it. I was bearish during this period here, up until around 6,900, 7,200. I was bearish, and as soon as we claimed 7,200, I had to flip too. And that month, I was hoping, hey, come on, Bitcoin, respect the monthly 21 EMA. This is the big bear test for everyone, so we can look for that move down. But market then too respected it. Of course, we were playing the 4-day and the weekly time frames, and we didn't have to wait for the monthly. But the monthly simply confirmed the thesis to flip bullish. And hey, this is why TA again was king. Again, back then, guys, there was such a bearish narrative. Everyone ignored the fact that the Fed had printed so much, because how could price possibly keep going up? Look at what the world just went through, right? That was my mindset too. And my mindset had confluence with the TA, right? Up until we flipped 7.2K. My rule said, hey, doesn't matter what your mindset is. 7.2K is your line in the sand. Your line in the sand, dude. And you got to flip. And then once I flipped, I started looking for the bullish narrative that people may be missing. And it's so obvious in hindsight, but the bullish narrative was that the Fed printed a lot of money. But let me tell you guys, no one respected that for the longest time. The Fed printed money all the way in March. Understand that we flipped 16.6K, the key level, right, that the market was looking for, only in December. That was 10 months, right? 10 months before people actually start taking that shit seriously, right? Similarly, there's a lot of bullish undertones currently that people are ignoring, that they'll only respect later. So you got to be patient on Bitcoin. Again. We went on a big tangent over here. My point is, historically, the monthly 21 EMA has been bullish resistance. So how am I playing it over here? just because it's been bullish resistance doesn't mean I'm just going to long over here. Doesn't mean I'm going to buy over here. No, I'm not doing that at all. All I'm doing is I'm not taking profits here. That's all. That's all. I'm not longing here. I'm not adding to my positions here. I'm still respecting it. I'm cautious against it. I'm not looking to trade against it. Right? Trading against it would mean me buying right at that level, and I'm not doing that. I'm not doing that. Now, that may go against the back testing of this, right? If you back test this, it's a buy, it's a buy. But I'm not treating it that way. I'm not treating it as a, hey, if you back test the monthly 21 EMA, it's a strategy that you should be bullish on. I'm treating it as a hard and simple rule that resistance is resistance until claimed otherwise. I'm looking for it to claim. I'm looking for it to be claimed, and I'm glad that I got into my position way earlier where I don't have to stress about this, which is why keep things mango, guys. And mango was screaming at us to position at 17K, and then we got tests of the monthly 10 SMA at around 20K, right? I gave you guys a very, very simple and detailed strategy on the weekly time frame, right? I did a stream for you guys where we went through the history of that strategy, and I showed you guys, hey, currently Bitcoin sitting at around 20K. Does that strategy tell us to buy or sell here? And everyone, after, because I went through the rules of the strategy with you guys on that stream, everyone realized that, hey, this is a buy. But at the time, Bitcoin looked bearish, but the strategy was telling us to buy. And had you just followed that strategy, you would have been around $8,000 to $10,000 up on your trade right now per Bitcoin that you're trading, right? Per Bitcoin that you're trading. So, 2x leverage at that point, guys, per Bitcoin gives you a 18K profit, right? So anyways, yeah, all I'm trying to say, guys, is keep it simple, keep it easy, keep it stress free, and in the long run, you will outperform 99% of this market. God damn it, guys. At the end of the day, Mango outperformed 3AC. We kept it simple, we kept it easy, we kept it stress free. We didn't leverage to the freaking tits. And hey, it's not that we didn't leverage, we used leverage to advantage. We used leverage to be efficient with our capital and to actually reduce risk. So yeah. Okay, so with that, guys, I'm gonna kind of wrap it up here because today's video is anyways really long, and I hope you guys got a peek into my mindset and my current thought process. Not much has changed since the strategies that we put together weeks and months ago. We can actually go ahead and do a quick summary and some key targets and buy levels that I'm going to reward those of you who made it to the end of the video. So yeah, let's go ahead and use this space right over here actually, and I'm going to scroll down. Okay, so summary of what's going on. So essentially, on the lower time frames, we are seeing a downtrend, right? We are seeing FUD as well, Binance FUD, and this momentum might be enough to threaten the mid time frames, right? Mid time frames are still long, but these could be threatened by the lower time frames, right? So we're not really interested in trading the mid time frames at the moment. We're going to be watching to see whether lower time frames break the mid time frame trend. If the big mid time frame trend breaks, I'll be looking to bid on the higher time frame levels, which those target buy opportunity levels are coming in at. The first opportunity is at 24K, right? That's 24K. That's your weekly levels coming around there. Then we also have some key levels at around 22K. So those are going to be key levels for Bitcoin to hold if we do see a move towards the downside. I have a stinking feeling that the market may just respect the 25K level, right, as a psychological level that we flipped. So look between 24K to 25K as a zone, right? We're not going to be marking out like exact numbers at the moment, but over here it's like more like 21.8K or 22.2K, something like that. Go ahead and use your SNR to figure out the key levels over here. But these are the junctures that you guys want to be looking at. Okay, the higher time frame levels are 24K to 25K, and your 22K to 21K zone. So the mid time frames, not interested in trading, but we will be watching it, right? Lower time frames, we do have downward pressure coming in from momentum